Hi, I'm Don Mecoy. I'm a reporter with the Oklahoman, the business news desk, and I'm here today with John Burns, who's the CEO of Burns Advisory Group, and we're going to talk a little bit about this big package that the federal government is trying to put together to sort of bail out the financial sector. As we meet here right now, everything is sort of up in the air. We really don't know exactly what's going to happen. But John, what do you think's going to happen? Do you think they're going to get a deal done?
Yeah, I think that's inevitable. Some sort of package is going to have to, is going to. It's not that it has to, but is going to do that. And I, you know, the term bailout is really used. I think if it's done structured, it's not about bailing out the companies necessarily for their past behavior. I think for the most part, those companies are paying and going to pay, and their shareholders are paying a pretty significant price and should. But it's really bailing out and making the credit markets work so that America can go on about its business. Mm-hmm. That's the essence of what should be trying to get done here.
Well, what happens, you say it's inevitable, but you know, it sort of broke apart last night when they were negotiating. What if they don't get a deal done? What would happen in that scenario?
Well, you know, eventually, I think everything would be, I don't want to say everything would be okay, but if they don't do it, our economy is strong, and things would get worked out. I think the real issue is it would take time. I don't think there's any doubt that we would see pretty severe recessionary pressures. We would, you know, we've got, you know, we get upset when unemployment is at 6% where it is now, but I don't have any doubts that would go up pretty dramatically. You know, so, you know, I think it would be a very rough patch for our economy. So it's either way, we would get through it, but it would really test the resolve of the American people without it.
So what's the best case scenario? What's the best end result that we could possibly see with all this that's going on right now?
Well, I think let's kind of talk on both ends for a minute. If we have the bailout, I think what you will see is a little bit of sense of relief. So I don't know that I would see necessarily, you know, huge stock market gyrations one way or the other, but a sense of overall relief. Softer landing. The bailout's going to take time to work through all the details of that too, and get credit markets working, and get the assets that are impaired a little stronger and stable, and eventually they should all, you know, they should recover. Some of them not 100%, some of them fully 100%. So that will take time. Without the bailout, it would be up to the private sector. You will see a lot more banks fail. You know, you will see stronger organizations and banks buy up assets for pennies on the dollar. So you know, really the financial system could get stronger and healthier through the latter of the two, but it will take time. And the companies that weren't, you know, leveraged up like that and weren't participating like that are going to probably do very, very well. The JP Morgans of the world, Bank of America, you know, they've made some pretty serious acquisitions and buying assets at very low prices and having strong distribution forces in the case of Merrill. Yeah. So when it's all said and done, they're in a pretty strong position.
Right. Well, all of this stuff is a little bit scary for the average investor. They're seeing, you know, some big names topple. They're seeing their portfolios decline in value. What should we be doing, and what should we be thinking about doing?
Well, sure. I think a couple things. One, I would think about what lessons can we learn from this. And so a couple of key themes here are that businesses and individuals misuse debt. And so they had debt. Eventually they couldn't pay it back. And they're losing and having to either go bankrupt and or lose their most valuable assets. In the cases of individuals, it's their homes. In the cases of the banks, it's the actual businesses and the assets they're in. So as individuals, being intelligent, don't get over leveraged, don't live beyond your means, whether you're, working and accumulating assets for retirement, or whether you're in retirement as well. So, risk is alive and well. And so if you don't overdo it in those areas, you're likely to be okay. As far as investing and how to position your portfolio, I think it's really important to understand that having a strategy for success is really important. So, if you're working and you're in your 30s, 40s, and you have a long time horizon, I wouldn't be too concerned about the short-term prices in the markets. I wouldn't be over-elated when they do well, and I wouldn't be overly concerned. In fact, I'd probably be a little excited that you're able to buy, say, the American economy and even the world economy at great prices. All world markets, virtually all assets, other than treasuries, have been impaired by 20 to 40% pretty easily. And even if prices deteriorate a little bit in the future moving forward, that's okay. So if you're investing in your 401ks, and then you're able to buy these assets at much lower prices. If you're retired, the real key to having a successful retirement strategy is to understand that it behooves you well to take an ownership position in our economy. And that's going to do well for years and years and years to come. The real key is not having to sell when you don't want to. So structure a game plan that's going to allow you to live on assets that and other resources for years and years on end. So we build very specific, customized strategies for our clients so that we don't ever have to worry about selling. Right now, there's you shouldn't be selling your stocks because you're giving them away.
Yeah.
So that's the real key for success.
Okay. Just don't get too scared by all
right, and have a plan.
Things.
Yeah. So have a game plan so that you're not going to be forced into fire sale prices. In essence, these banks, they're having to sell these assets at fire sale prices is what's happening because they can't cover their debts.
Okay. Well, we'll keep an eye on what happens. We'll have you back again to talk about maybe the post-bailout economy. And meanwhile, we'll have lots of coverage in the Oklahoman here on newsok.com. Thanks a lot for watching.